And now to today's big story. Traders are preparing for the worst as the coronavirus spreads across national borders, raising fears about its economic impact. Let's talk about it with Invesco global market strategist Brian Levitt, Yahoo Finance's editor-in-chief Andy Serwer, and Anjalee Khemlani in our newsroom. Good morning to you all. Brian, I'm going to start with you. Is the fear here that this epidemic, which could soon become a pandemic, will cause global economic recession?
Yeah, that is the fear here. And look, we were coming into this from not a point of significant economic strength. We have to remember that we were just coming out of the concerns of the trade war. The Fed had just gone through a period where they had eased policy. This was to be the year of modest growth, supportive policy, and now we're entering into the fourth big economic slowdown of this cycle, the others being the European debt crisis, the Fed rate hike in 15, and the trade war in 18. So we didn't need this. The economy was already on weak footing. So that's what the dollar's telling you. That's what the Treasury market is telling you, that this is going to be a pretty significant disruption in economic activity. The bigger question for investors is how panicked do you want to be of this? Look, markets are going to correct when there's economic or policy uncertainty. We are there now. That's why you're seeing this move in markets. But if you have a long-term investment plan, I think you need to look through this.
So you say correct, but do you think we will not dip into recession because of this?
Well, it remains to be seen.
If we ever have from a disease
we
before.
haven't, but we were at a close point. I mean, ISM PMI in the U.S. was already below 50. I mean, that's not a recessionary level, but we were already contracting. So I don't think we necessarily hit a recession, but the bigger point is we've got a pretty significant deceleration in economic activity that could persist for a while, and that's what the markets are telling us.
Andy, you know who doesn't need to see this? Cruise lines. These stocks have been absolutely hammered, but at least right now, the outlook over the next 6 months looks pretty bleak.
Yeah, and I mean, this is sort of where it all started, right? At least in terms of it becoming part of our national psyche and understanding was the Diamond Princess, which is owned by Royal Caribbean and or Carnival, I should say, Carnival Cruise. And there's the three public companies, Carnival, Royal Caribbean, and Norwegian. And in a way, they're emblematic of the entire epidemic/pandemic, which is to say, you know, there are these petri dishes or incubators in a way that we're bringing people from around the world together and traveling around and, you know, to some people's minds, spreading diseases. I know that people who run these businesses are not too keen on that, but the market has been, you know, brutal to these stocks. They're down over 20% year to date. And, you know, they'll go down the most and may come back the most. So if you're an investor, you know, this could be a place to play, but it's going to be very dangerous and dicey going forward.
Anjalee, I want to get you in here. I know that you look at big pharma. How is that sector being affected? A lot of people thought companies like Gilead trying to come up with a vaccine here would actually benefit, but there are some major downside risks to big pharma as well, right?
Sure. Well, Gilead continues to be, as well as Johnson & Johnson, to be sort of on the front line working with government organizations and departments to find a vaccine. So that's sort of still in play. And again, the timeline for that is going to be about a year and a half. So we still don't know just how far along they are. There are results expected from Gilead in the coming weeks. And these are in some ways, Gilead is working on something that is sort of like repurposing a drug that they have already developed, while Johnson & Johnson is also doing the same. So that's a big pharma perspective from the branding. But when you talk about really the reliance that the pharmaceutical sector at large has on China, it really comes from the supply chain, because active pharmaceutical ingredients, 72% of those are from China. And so a lot of these companies, especially the large generic drug makers, are waiting to see just what that disruption could be to their production.
Brian, let's say, I want to know the worst case scenario for the markets here. Let's say this does cross over into pandemic. What does the downside risk look like to markets, and how do you play that right now?
Well, look, I mean, I think you could see the type of correction we haven't seen in markets in a while. I mean, look, we saw a correction in late 2018 of 20% amid significant uncertainty around supply chains and trade wars and monetary policy tightening. So we know what it looks like to have a severe disruption to economic activity in a weak economic environment. Now, I'm not going to sit here today and say we're heading down 20% in the equity market, but what I will say is when there's economic or policy policy uncertainty, we tend to get these type of drawdowns in markets. The bigger question for investors is, even if you were to move into a prolonged period of weakening economic activity and dare we say a recession, does that change the long-term secular bull story? And we know that you can have recessions or significant slowdowns in long-term secular bulls. 1991 is a prominent example, and the market was up 82 from 1982 to 1999, and 91 ended up being a blip. So I am still in the camp that we are in a long-term secular bull market. Long-term secular bull markets tend to end with euphoria and, banks that are poorly capitalized and significant Fed tightening. And I don't think we're there. So what we're dealing with is an unexpected shock that is leading to weakness in economic activity that is weighing on all the markets, dollar stronger, yield curve flatter, equity starting to sell off. But ultimately, I suspect policymakers will respond. I suspect slowly, incrementally, hopefully we'll get people back to work. The medical community will find a way to respond to this. And we will be back at some point later in this year talking about stabilizing economic activity.
I appreciate the positivity. Brian Levitt, Anjalee, Khemlani, thank you.